Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
It's a mixed picture, similar to what Wall Street was last night as well.
Step one is the stabilization of the country. We don't want it descending into chaos.
Market sold off into close. Nasdaq was also up a little bit more. That also sold off. But, I mean, of course, there was a bit of a positive close. This is a start. 26,100 on the Nifty, 84,700 something on the sensex. So, a pretty quiet start.
The domestics are hoping we have a better year than last year.
The GDP for the full year is estimated by the MOSPI at 7.4%, obviously much better than last year's 6.5%.
We saw in 2025 and exactly how 2026 began as well. Overnight finally has started with some profit taking.
Completed the enrollment of study participants in their phase 3 clinical trials for their dengue vaccine. It is on the back of a subsidy that the company has received. It's a certification.
Overall, I believe this will drive category growth, and our role has been category maker.
Another day where we're seeing severe selling pressure which has come by.
If you look at IDFC First Bank, they have cut down their savings account rates almost by 25 to 200 basis points.
Big updates coming in from the US, and that's the reason why we are seeing that impact on Indian markets as well.
Well, that is the day so far. It is down and out once again here on the markets. 200 points lower. The Nifty below the 26,000 level, and of course it's broken below the 20-day moving average as well. It's been coming for a while, and I think it's finally happened. It's a short-term important pivotal level that many do use, especially those who are trading. This is Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. Nigel and Rima with me. Guys, afternoon.
Hi. For the last 3 days, we were down, but we were never out.
Yeah.
But, today when you look at the mid-cap screen, it's a near 2% fall on the mid-cap index. Look at the advanced decline ratio, 2,500 stocks in the red for less than 500 stocks gaining. And now the screen is looking a tad bit ugly.
Yeah, I think that passage of that bill and the fear of higher tariffs with regard to crude oil that's coming out of Russia, that's clearly dented sentiment, because from the time that news hit the wires, that's when, in fact, we did see a deeper gash. And the evidence, with regard to expectations on the trade deal has been Gokul Das. That's down more than 10% today, clearly telling you the street is getting a little bit skittish with regard to when that India-US trade deal will come about. And, in terms of the timing, in terms of what kind of leniency we can get from around this 50% odd mark. So that clearly is the barometer out there. When there are hopes, we see Gokul Das up and about. It's corrected big time from the top.
It's an interesting thought experiment. Say tomorrow evening we get, but it'll be Saturday morning for us, right? I mean, their morning, Friday.
You're talking about the opinion day, the judgment by the Supreme Court.
The judgment from the Supreme Court will be Saturday.
We'll get it on, we'll react to it, I think, on Monday.
On Monday.
Yeah.
In any ways, we will react to it on Monday. But I think the judgment itself for us will be Friday morning, which will be...
No, it's Friday evening US time. What time is it on Friday in the US?
We'll check it out.
You'll check it out, but I think it's... either way...
I think I've confused myself. But the point is...
Friday during the day is when they will take it on board, right? Yeah. By that time, we'll be done.
No, that is clear. We will only be able to react to it on Monday. On Monday. So that's for practical purposes. That is my point was. Say for example, the Supreme Court strikes it down. Immediately, President Trump will come and post that the judges are this and bad and all of that stuff, and he'll say, "Well, I'll find a way to reimpose it."
Yes.
When we come back on Monday, the question is, will Gokul Das be up down 10%? Will it be? What will it do on Monday? I mean,
according to Google, it's 10 a.m. Eastern time. So we will get the announcement late on Friday night.
We will get Friday night. Yeah.
Friday night. It's 10 a.m. Eastern time.
So to the other question, which is what will
Gokul Das, I think it's already at that 52-week low. The 52-week low is 590 rupees. It's at around 610 rupees.
Yeah.
So is the tariff going up further from here? I mean, I don't know. Otherwise,
I think it'll even if the judgment will come and President Trump, being President Trump, he will rant and rave about it and say, well, etc. all of that, and he'll communicate adequately that the tariffs are going to stay one way or the other. But I think for a period of time there will be some amount of confusion.
Yeah,
because the other routes, etc., are more cumbersome. There will be a gap between when, because these tariffs are done under emergency route, which is what is being challenged. Now, if he's got to do it through the proper legislative route, that will take time.
Yeah.
So, and of course, there is the question of, now that the Supreme Court has voided these tariffs, if it comes to that.
If it comes to that, yeah.
I mean, there is the question of refunds, etc., right? So I think a few days at least, there will be some amount of chaos, right? Generally, which is not such a bad thing for a market like India, especially names like Gokuldas, which basically is half from the highs. The recent highs, 1,200 or so was the high, at about 600 now.
What a tricky time, right, to interpret news. You have suddenly Trump deciding once you get into a country, pick up the leader from there, take him back and try him in some court. Then you're waiting by in terms of tariffs. Which one is more deadly?
But I think the Supreme Court one is important because apart from the economic impact of refunds, etc., tariffs, a verdict against him will also sort of rein in his executive powers. But if the Supreme Court, in a way, sides with Trump, it just gives him more powers to unilaterally push through his agenda as he has been, but with a lot more vigor. So it's going to have consequences.
No,
I think
there's one more thing last night which has been not talked about that much, right? The so-called ICE agency. Which are responsible for all these deportations and etc. There was an incident where they shot and killed a man in the US. Okay. I'm 100% sure that's a US citizen, by the way, an American, by whatever. And I think it's got to play out in the political news cycle in a big way as well, right? So it's not going to go down with the electorate. Yeah. So to the point of political approval for everything that he's doing, stuff like what happened last night. Yeah. I mean, I think that is the other thing. I was thinking, and India was briefly referred to as the anti-AI trade. Is India the anti-Trump trade? I don't know. I don't want to go that far.
Yeah.
But India, of course, certainly is one of the worst affected. The point is, with that 500% number is scaring people. Philosophically, tariffs are at 50%. So it can go higher, but then beyond a point, it becomes all the same. It's already hurting exports a lot. I think that's an important point because I think many people are looking at exports out of India and saying, well, the hit is not that much. The important point is a lot of that fall is buffered by exports of Apple products out of the country. So that is the reason why the overall decline in terms of exports to US doesn't show up that much. So we can chat more about this as we go on. Let's just quickly talk about what's coming up here. So it's broad-based, of course, 200 points lower, below the 20-day, and it's geopolitics through and through across the board. And we have a special guest joining us in just a bit. We have the former chairman, managing director of HPCL, Mr. Surana, who will talk to us about that because oil, of course, is the central point here. And we'll have him join us in just a bit or so. Some other stocks, metals, etc., there's a bit of a profit booking unwind, so the metal index is down about 3% or so. How should you position yourself is the question. Mitesh is with us with exactly that. Mitesh, what do you recommend?
Prashant, early in the day, we were talking about the fact that, we might test the lower end of the range, which is close to about 25,900. We've kind of gone there and just managed to hold on to that level. Not a sign of reversal is yet, so I'm waiting it out on the index. But yeah, in that sense, I think today's low is an important one, 25,884 and 85. I think that entire zone of 25,900 to about 25,850 is a key level. If it breaks, then I think we might have more correction. So watching it closely. Right now, I have one buy and one sell. I have a buy on NTPC. I think that's a stock which gave a breakout, is giving a pullback, giving you fresh entry level, which are good. So buy with a stop at 340 for targets of 355. And NBCC is a sell with a stop at 115.10 for targets of 107.
Okay, all right. Let's. I think there is only one topic which is being debated, which is being talked about in markets right now, which is of course this that tweet last night from one of the US senators about the Russia sanctions bill, and that's the tweet I'm talking about. I'll put it very simply. So far, only two entities were sanctioned by the US, Rosneft and Lukoil. So you couldn't buy oil from there. But companies, etc., were buying what was non-sanctioned oil, basically, from other sources. Now the bill last night essentially says that anything you buy, any Russian oil you buy, basically will lead to up to a 500% tariffs on everything out of the country which is doing this. And it, of course, specifically names countries like China, India, Brazil, etc. And I think that is what is causing a fair bit of nervousness. We have, as I said, Mr. Surana joining us. He's former chairman, HPCL, needs little by way of introduction. Mr. Surana, good afternoon. Our first chat in the new year, so wishing you a happy 26, sir. What I want to understand from you is this, what should, and I can tell you, people are kind of puzzled how to look at this. How much are we buying how much Russian oil are we buying currently? How can we, is it sanctioned? It is not sanctioned. I'm assuming it is all non-sanctioned, whatever we're buying anyway, right? Which is not from these two entities. So just talk to us a little bit about your thinking on this matter.
Good afternoon, Prashant, and wish you a happy new year to you and all your viewers. So as far as the Russian oil is concerned, it has gone into different steps, the sanctions. So the last sanction is on particular entities and particular assets. The oil per se is not sanctioned and the country per se was not sanctioned. And therefore, India was importing Russian oil from the entities which are non-sanctioned. And to that extent, depending on the techno-economic analysis, the companies were making their buying decisions, depending on what suits to their refinery, depending on what the configuration they have. Now, the new tariff, the way of course, it is yet to be passed, and whatever we have seen it in the media. First thing, we need to be clear that this is not India specific per se. So what it says is that the president is empowered to increase the tariff to 500%, at least 500%. That's the way it mentions. For relative to value of all such goods and services which are imported from the countries which have an exchange of petroleum products and uranium from Russia. Engage in import of, knowingly engage, rather, that's the wording which is used. So there are a lot of wordings which we need to interpret properly and we need to see. Right now, when the tariff is being applied, there is a list of the products which are not included there. So there is an exemption list also. So we also need to see that what gets exempted and what doesn't get exempted for tariff. So whether it is 50 to 500 for all the goods or for the thing which are applicable to that's the one. And second, we also need to say that there was also earlier, there are some, as far as the Europe is concerned, that sanction had a value limit on the price of the oil. Whether ultimately the way it passed, whether that is also something related to tariff, which related to price of the crude, which ensures that the oil flows, but there is no substantial financial gains to Russia, what seemed to be the purpose. So we need to see it in this context, and provided it gets passed, because it is not only India specific, it also affects the other countries like China, Brazil, and there may be other imperatives which may have some repercussions, and therefore the implementation may be country to country, implementation may be depending on the goods, implementation may be dependent on the context in which it is done and when it is done. So right now it is more an empowerment and legal frame which is being provided to it.
Let me ask you this, right? If you were running HPCL and you ran HPCL for many years successfully, what would you do to this? And you see this out there, what would you do?
No, as far as any country for that matter, why HPCL or any company, they do the techno-economic analysis. So there will be a crude basket which can suit to the refineries which we have, and there is an objective function basically which is the net refining margin which it gives. And you run that model, and then you apply the constraints which is availability or any sanction, non-sanction, etc., and based on that which suits you best you do. So the discount comes into picture, the freight comes into picture, the availability comes into picture, and any other constraint.
No, that is how you would normally do it, Mr. Surana. But my point is, given this threat, right? Mm-hmm. How would you respond? I mean, at the end of the day, as you've said it many times, and as you're saying right now, also it's economics, right? I mean, the price that you're paying. Techno-economic. So, but in the face of this, and this is highly unusual, the situation we are faced with, would you look to the? I mean, if I was a question, it's hypothetical. If you're running HPC, would you look to the Ministry for Direction Like, how would it happen? What would happen?
So the question is that if there has to be a diplomatic or a geopolitical context, and if there is a government directive on that, that we need to follow. But if there is no government directive, then the companies will follow the techno-economic interest of theirs. That will be the logic and the pecking order.
Okay. Okay. So companies will not abandon the logic of in terms of where they buy oil from, which is what you describe as techno-economic, unless they're specifically asked to.
Naturally, because it will be wrong on the part of the companies to apply the logic which is not actually told them to be a constraint. So the companies are supposed to look into which is in the best interest of their stakeholders, and that is a techno-commercial analysis of the crude, which is the best buy for them and which gives the best margin to them. And if there is a constraint, then that is to be superimposed on it, and that constraint can be superimposed only if there is a specific direction to that effect.
Yeah. Typically, in a situation like this, would you imagine that there would be I don't know if there have been any instances when you were running HPCL where, there are circumstances, right? I mean, where the government, as the rightful owner, can step in one way or the other.
So when you are in a war, you find the situation and then find a solution according to that, and there is nothing right or wrong or absolute answers to that. So when the bill gets passed and then when it comes under implementation, at that time the situation is to be reviewed and the answer has to be found. So far, country has navigated these issues, and it is not the first time that we are facing a situation like this. Maybe it is the number is creating an awe to everybody, 500%. But the question is whether it is 50% or 500%. It is the economics will get disturbed. So the country and the companies have to take a call accordingly. So it is not a new situation. It may be a new context.
Yeah. Typically, I mean, just to understand, when you buy oil from Russia over the years, not just now in the last year and a half, how is this done? This is bought directly from companies like before these two entities were sanctioned. I mean, our companies buy it from? So which entities do they buy from? These companies directly or through traders, or how does it happen?
So historically, India has not been buying much of Russian oil because it was not finding the economic favor because of the freight cost, etc. Only after the discount started coming, that's only the Russian oil started finding favor. That's the first part. Now, because you have got a term contract and the crude contract, because India was not traditionally buying a lot of oil from Russia, there were very few term contracts. So it was basically spot which was going by tender, and the tenders were mostly on the delivered basis, because that is a rough terrain which has to follow, and therefore it was mostly on delivered basis, and so that is how it was being bought so far. Only when the quantity of Russian oil increased substantially, at that time only some companies thought of going for the term contract, but that also on certain terms and conditions.
Yeah. No, I get that. That is pretty useful to understand. Is it? I mean, in the next couple of days, right? If we see statements from, is it possible we see statements, individual releases from oil companies like HP, IOC, BP, etc., saying, I don't know what they'll say. Is it possible they kind of clearly put out, we're not buying, as I understand it, the percentage of Russian oil is pretty low. Is it possible they come out and give us numbers or say, well, it is zero? Like a private refiner has done recently.
No, I assume that the private refiner has reacted to certain news which was already there. So it was more, I think, a response to a news. Of course, it is for the companies to decide what they want to put out, but I don't think there is a need for the companies to suo motu put a statement to that effect, unless there is a trigger. So it is individual companies, the commercial interest which they need to protect in the larger context of the country's interest. And I don't think that there's a need for the companies to put a suo motu statement to that effect, that whether they are buying, they will buy, they will not buy. We need to see as it develops. So right now it is premature to say that.
Yeah. As the saying goes, right? Maybe we live in strange times, and this is certainly one of the strangest times we find
and
ourselves.
One more thing we need to be clear is that you can't be sure that in today's environment, more things get implemented by the tweeters rather than something getting passed in the Senate or the House of Representatives. So a bill coming in the Senate or the House of Representatives for discussion, that does not automatically mean that something else cannot happen or something which is passed will happen. So
absolutely. And all valid points, Mr. Surana. I think we'll see how this goes, and we'll continue to track it. But I think this does add a fair bit of texture to the conversation from someone like you who's run.
Probably I can add that irrespective of whether we buy from Russia or not Russia, in today's situation, supply is not a problem at all because it is an oversupplied market.
100%.
So the question is, supply per se is not a problem. It may be pricing issue. It may be whether you're buying from X place or Y place. But the second point is, even if you are not buying from X place, in the oil is an international commodity. It finds its way to some other place. Overall, it does have its input in the total supply situation, unless you completely block that supply source. So that point we need to keep in mind.
Yeah. No, 100%. Mr. Surana, thank you very much for joining us. It's a pleasure, sir. And we will invite you back because this is, of course, not the last word in the story. Perhaps there is more to come. And hopefully, fingers crossed, nothing worse. Well, I think we'll take a break. But before that, let's just turn back to the market. Hormuz is standing by with a spotlight on the top movers. Backed by volumes one way or the other, up and down. Hormuz, take it away.
Well, the one common trend that you're observing on the stocks that are falling today is, barring a few, most of the stocks that are declining 7, 8, 10% are not declining on very significant volumes. I'll give you some case in points as well. Now, look at these export-oriented names. Gokaldas, Avanti Feeds, Apex Frozen Foods, all down 7 to 9%. But take a look at the volumes here. Gokaldas Exports is, of course, trading on very significant volumes. The 33 lakh shares traded compared to a 2 lakh share daily 20-day average. Avanti Feeds, well, hardly 2x of its 20-day average, but Apex Frozen Foods is trading on volumes that are less than 50% of its 20-day average. So not significant volumes seen on these export-oriented names. The other stock in the list today is Balaji Amines. That is one stock that has been bucking the trend today in an otherwise wobbly market. It snapped a 3-day losing streak today, the biggest single-day gain that the stock has seen since April of 2021. Today's volumes are already the highest on record. Close to 1 crore shares have been traded today. The 20-day average is only 34,000 shares. Now, the stock has moved above its 50 DMA, which is at 1187, which is the level at which it is currently trading at. The 100 DMA on the upside is at 1320, so still some distance away on the upside. There's been an underperformer around this time, around 40% below its 52-week high, which is close to 2,000 rupees. And it has entered this new year after 4 consecutive years of negative returns. Now, take a look at the PSU names as well. This is another case in point of stocks not falling on very significant volumes. HPCL, NMDC, RVNL are just a few examples here, down between 3 to 5%. Now, barring BEL and some of the other defense names, all other PSU stocks are trading lower as well. Now, look at NMDC. That 4 crore shares traded, 20-day average is 2 crore. RVNL's volume today is less than its 20-day average. And even HPCL's volume, which is among the top losers today, is not as significant in comparison to its 20-day average either. The last name on the list, Signature Global, one such name that's falling on heavy volumes. It's the 3rd straight day of losses, the top loser on the Nifty Realty Index, the biggest single day fall since November of 24. We have had 37 lakh shares that have been traded on the stock. The 20-day average is only 2.5 lakh shares. The stock has now moved below its key moving averages. It's down almost 30% from its 52-week high, which was close to 1,400 rupees. And despite that, it is still up around 2.5, 3x from its IPO price, which was around 385 rupees.
Thank you very much for that. There's one more stock, TCS. That's also slipping, that's hurting quite a bit, 2.5% lower on TCS ahead of numbers on Monday. Maybe the street expects a bit of a disappointment. Consensus expectations are that the company's top line will see a growth of about 0.3, 0.5%. But is the street expecting maybe a bit of a miss, a disappointment? The price action perhaps seems to signal that. Get into a break. On the other side, Vikas Khemani of Carnelian Asset Management will join in. Stay tuned. Well, the pressure's still on for the markets. Nifty down more than 200 points. It's holding on to 25,900. But it's breached the 20 and the 50-day moving average today. Sensex lower by 650 points. But Nigel, it's the Sensex weekly expiry. So what are the F&O trends that you are spotting?
Well, I'm tracking the Nifty actually today, and the Nifty, in fact, is trading below that 20-day MA, clearly telling you that it's a weak trading session in today's trade because there's not been even a 30-40 point recovery in today's trading session. And now the 20-day MA, which was a support, now that becomes a resistance. So on the way up, you'll have to cross the 20-day MA to feel good, which is the 120 points away from current levels from a bullish perspective. The one saving grace is the PCR. In a matter of 3 trading sessions, it's come down from around 1.5, which was closer to the upper end of the range. Now it's closer to the lower end of the range. That's because, the call writing has become a little bit too easy, actually. There's a little bit of complacency that's dipping in there. The 26,000 call, just take a look at the open interest built up. Massive, more than a crore shares out there. The premium out there is down to close to around 60, 70 rupees, I think. So 80 rupees, actually, the last time I checked. It was down close to around 60% from the top. The 26,100 call as well, premium out there, down close to around 68%. Last I checked, it was around 42 rupees. What this is telling you, when the premium crashes by around 60 to around 70%, the call writers are getting very, very confident, which in fact would give some glimmer of hope, though technically the structure is actually broken in today's trading session. The 25,900 put, on the put side, that's the most active. If you bought this particular put, getting into today's trading session, you would have bought it for ballpark around 15 to around 20 rupees. And currently that premium's around 71 rupees. So those put writers are making, put buyers are making a lot of money. Put buyers, beg your pardon. While the put writing now is gradually being observed out here because the bulls will want to defend the 25,800 odd mark. So that's going to be the important mark. The Nifty, as I said, it's broken down because it's trading below the 20-day MA. However, what's giving you some glimmer of hope and which are going to be the key monitorables from here on is going to be the Nifty Bank that needs to defend the 20-day MA. That's around 300 points away from current levels. You wanted to defend that mark. And big boy Reliance Industries from around 1,600 rupees, that as well has corrected. But the 20-day MA comes in at around 1,430 rupees. It needs to defend this particular mark. Individual stocks that we're looking at, IFL Finance, all through the week, it's been looking good. Today, there is some unwinding of positions that you're seeing on IFL Finance. Not fresh shorting, but unwinding. Hindalco, similar is the case out there. The stock is down, the open interest is down. So there is unwinding of positions out here. But one stock that's actually holding strong is IDFC First Bank. They pulled down their rates. The hope is that, in fact, momentum comes back into the stock from here on. And that's why you're seeing a bit of a short covering bounce that's playing out. Because though the Nifty Bank is down 200 points, IDFC Bank is up 2% with the open interest down. So keep an eye out on that name. Back to you.
Okay, all right, Nigel, thanks very much for that. So that's the F&O positioning as things stand right now. Vikas Khemani is now joining us. And Vikas, of course, is founder, Carnelian Asset Managers and Advisors. Vikas, good afternoon. First chat of the new year, so wishing you a happy 2026.
Prashant, wish you and your viewers a great 2026.
Well, I certainly hope that comes true, that wish comes true, Vikas. But today it's a bit of a down and out kind of a day, right? And it's one doesn't know. There are so many things up in the air. And somebody was telling me from a currency point of the person in the currency markets and rates market, etc., saying, well, from a macro directional standpoint, all this can't be great. It doesn't directly impact us. All that has happened since the beginning of this new year. It's another matter that here in India, we are affected in a special way because of these punitive tariffs of 25, another reciprocal of 25. And of course, what we heard last night. What's your sense, Vikas? And this is a directional view on the index to begin with. Do you think the market's preparing for it's all news related now in terms of the next big move, or the market will find its footing irrespective of news?
So I think, Prashant, every 3-4 years, if you see this kind of situation happens, it's not like, and I'll take your memory back to 2022. When 2021 we had a great year and 2022 began with a good note and Ukraine war started, and whole of the year, we only saw positive news coming through inflation, oil spiked up, inflation, and I think the sentiment was bad. Mid and small cap index had ended up negative about, I think, 8-10% or something like that. And Nifty was minorly positive for the whole year, right? And that 23 turned out to be a great year, right? If you say similar, 24 was a decent year. 25 was a kind of poor year from a small and mid cap perspective. Nifty was 3-4% up kind of stuff. So every few years there's a similar kind of setup which happens. And right now, of course, post Trump coming to the power, we have seen continuous negative news flow. And my sense is that, right now there's a lot of noise, rightfully, geopolitical situation the way it is, and that is clouding out investors' sort of market. As far as India is concerned, US, we all have debated to death that, the US tariff is not very significant as far as the Indian economy is concerned because it's not a very sizable part of India's exports. But having said that, you don't want that kind of situation. So even if that were to continue, Indian economy will chug along, and we have seen data in last 2 quarters of GDP and everything has turned out to be fine. So, and government has taken measures to kind of boost economic growth further. So it's not that India is solely dependent on US exports and hence, things will not work out. So India is chugging along well. But when India is doing well, even in a global, worrisome market, obviously, it is very natural to have this kind of sentiment and market. And we don't know how long it will take versus, and also how bad it can become as far as geopolitical concern. So hence, this is the kind of sentiment right now. Markets are, 500 points plus minus. We have seen in last couple of months in sense, in and around 26,000 Nifty has kind of hovered or consolidated. And once this kind of crowd settles down, I think there could be, resumption of the sort of direction upwards. I think there's a good fiscal deficit and fiscal stimulus has happened. Monetary stimulus has happened. GDP numbers are good. Demand is decent. So directionally, I don't see major valuations have corrected. Last year, India was one of the worst underperforming markets in the emerging market basket. Currencies at 90. So you have confluence of all the factors where say, look, downside seems to be limited. The kind of current environment might continue, uncertain might continue for some more time. But whenever this kind of happens, you might see. So I would like to believe that 2026 could be a better year than 2025.
So you're fully invested, Vikas, or because there is still some caution, many unknowns on the horizon, you are in a way hedging the bet on India, maybe increasing the allocation to gold or any safe haven, or diversifying your India exposure? I mean, or are you fully invested? And if yes, where are you incrementally deploying the money in India?
We are fully invested. I think, in fact, in last 1 month, whatever little money we were getting, we invested and all. Because our view has been that downside is kind of limited from a value perspective, and hence there's no point in waiting for the moment the noise gets clear, the things, whenever the uncertainty gets clear, you will see markets will not be here. So you can either choose timing or you can choose pricing. And wherever we are comfortable around the stock specific names in terms of, valuations, growth, comfort, we are kind of, buying and remaining invested. Wherever we are not, we kind of don't. So it's a very much stock specific call, and it's a very stock pickers market in that sense. So we are just continuing to pursue that in our portfolio building strategy.
All right. Hi, Vikas. Good to see you, Ben, and good to speak to you as always. So for 2026, do you think it'll be a reversal of 2025? In 2025, you saw the Nifty gaining a little bit, but the broader markets were under intense pressure. Portfolios got absolutely slammed, which is a normal phenomena that you see in equity markets, over a longer span of time. You have a couple of off years. Do you think in 2026, actually the broader markets make their way back and maybe, in fact, outperform the headline index?
I would say that there's a good probability of that. Learning from 2022 experience, where similar environment was there. 23 turned out to be completely, great for broader markets. So, like I said, Indian economy, there's nothing wrong. It's all progressing very well. And so it could be, I would assign a good probability of that, of kind of playing that out.
Okay, all right. That will be the hope, because otherwise the headline index went up last year, but portfolios didn't feel like that. If you had to pick up a couple of themes, in the past you have mentioned that you've been more or less bullish on the manufacturing theme as well. Will you stick to that? If you were to give us 2 themes for 2026, which ones would they be?
From one thing, from a new theme perspective, new or not new, I don't know, but currently, given the geopolitical, the rearmament of the countries would happen, and hence there could be a lot of investment or reinvestment in the defense related globally, not only in India, and hence I do believe that that segment can do well, and any beneficiary of that, which could be metals, which could be many more players, could be beneficiary of that. So that's the one theme I do believe that can play out well, and this could be a longer term theme, because once the geopolitical situation becomes worse, I think every country wants to sort of become safe, invest into their spaces, in their safety. So I think that trend seems to be slightly long term, and it could play out not only in 26 but even way forward. So one needs to look at that whole space with a fresh pair of eyes. Other than that, I think you will see consumer discretionary player automobiles can, I think, this year, in my opinion, do well. Because again, growth is coming well, tax rates cut could benefit, interest rates cut could benefit, and so that could be a good segment to look at.
Defense, is that a new theme that you're liking? Because I remember in an old conversation, you were avoiding defense. So are you or are you playing defense via another way, this rearmament theme?
So that's what I'm saying, that we've seen some bit of valuation getting corrected there. Still, there are many of them are outside the comfort zone. But I did mention that we need to look at with a fresh pair of eyes that how should, in light of the current geopolitical situations, and I guess it will pan out like if, let's say, some further action happens on the Greenland, and few countries have mentioned that probably NATO is over. So if the NATO is over, then every country will have to reinvest in it. So I'm saying, I think one should keep a watch on this space. According to me, this will, this probably ship seems to be sailing, and there could be a lot of interesting stuff happening out there. So we are kind of, revisiting, seeing this with a fresh pair of eyes on this. That how should one look at it?
Yeah. Because I think you put it well in that one line that you could wait for. The news of the price. That's what you had. That's how you put it. Because
I said if you wait for the clarity, you will not get the same price, right? So and we don't know. So look again, you have to play probabilities. You have to play your comfort with the stock, individual business management. So we really don't take a big view on the market. Looks like market's going to consolidate here, but eventually you go down. Then don't wait too much of. If you get clarity, you will not get the price.
Yeah. It's just that it's become tougher, right, to try and assign probabilities because I think that is maybe
not easy part, right?
The number of the issue, which is that a range of possibilities also become much higher, larger. Well, Vikas, thank you very much for joining us. It's a great chat, and we'll leave it there for now.
Lovely chatting.
Okay, we'll take a quick commercial break here. As always, we come back, we get you what's happening with dealing rooms. Nimesh joins us on D Street Chatter. And buy today, sell tomorrow. Short-term trading ideas with the technical experts after that. Stay tuned.
Well, if you're hoping for a recovery in the last 30 minutes or so, doesn't seem to be the case, at least as of now. Adani Ports at the low point of the day, Jio Financial at the low point of the day, and Coal India as well has come in for some selling. So intraday charts of all these stocks actually should come up for you on the screen. The markets have taken actually a leg down and now trading well below that 25,900 mark. Good time to get a sense in terms of what's going on in D Street Chatter. Nimesh joins us to tell us exactly that. Nimesh?
The last leg of the drag is largely coming in from the capital good names. So if you look at ABB, Siemens, BHL, all are under pressure on the back of that news flash that maybe the Chinese players will be allowed. So that's one space which has brought the overall markets down as well. But I guess the fall seems to be largely backed by very aggressive FI selling as well. That's been the consistent feedback for the last couple of days, that the FIs are better sellers. It's not showing up in the numbers, in the net numbers though, but there is selling is what I understand, and that's the case today as well. Across large caps, broader market names, there is selling pressure from large institutions. I think the Nifty has actually broken the crucial support of 25,920 as well. So need to see on a closing basis if we can sustain that levels. If that gets taken out, you might see further selling in the broader markets and in Nifty as well. Having said that, the PCR has now come to almost at 0.65 levels. And historically, we've seen a market bounce back from those levels of 0.6, 0.65 levels. So that's a bit of a level to watch out for. It looks extremely oversold. And also understand from an HNI perspective or from traders' perspective, a lot of positions got squared off today after the big fall. So the market seems to be a bit light, and the PCR is suggesting the same. So watch out for a pullback. But at least the pressure seems to be largely coming in from aggressive selling from the larger FIs in the last couple of days.
Okay, got it, Nimesh. Tell us about individual stocks. What are you picking up?
Well, so the first stock on my list is Black Box. It's been under pressure today, but been largely range-bound in the last couple of months. But I understand this quarterly update in terms of shareholding pattern can be quite interesting. Some leading domestic mutual funds have added, is what I understand in Black Box in the last couple of months. So that's something to track there. That's the first stock. The second name is IEX. We saw a big up move after that court hearing. But in the last couple of days, one leading long-only FII and a domestic mutual fund has bought into IEX at current level. So maybe tomorrow is the day to watch out for the fine, if indeed it's a final hearing as far as the CRC order is concerned. So that's IEX in focus. The third name is Equitas Small Finance Bank. It's been under pressure of late, but I understand the selling pressure from a leading long-only FI is largely over. So watch out for further supply. Largely it's over is my sense in Equitas Small Finance Bank. And the last one is Zydus Life. Again, under pressure today and has actually underperformed the pharma basket of late. But again, the street is anticipating a corporate development. There is a strong chatter that maybe the company is looking for a very large acquisition. So that's something to track in Zydus Life.
Lots of acquisitions overseas, Nimesh?
Oh, looks like, Prashant, especially in the pharma names. Yesterday Sun Pharma was part of my chatter list. Even there, the anticipation is it's going to be a very large acquisition that the company might do. So Sun Pharma is one, and now Zydus is something which it has been anticipating a large acquisition. So watch out for this space very closely. Some big deals could be around the corner, especially M&A in pharma names. And
a couple of days ago, you mentioned a smaller pharma company. Any relation between these two? All of them are mutually exclusive.
No, so that's a small acquisition, Nigel. 2,000 crore market cap company. I know you're talking about Bliss GVS, but I think that's more like a domestic deal where a domestic player will buy out possibly that particular company. So again, it's in the works. I mean, all these M&As do take time. Sometimes, at the fag end, it falls off. So not to speculate too much, but yeah, there is a lot of pharma M&A is on the cards.
Got it. Okay. All right. Thanks a lot, Nimesh, for joining in and giving us all that buzz. Let's hop across to Mitesh now from Bonanza Portfolio, who joins us on the show. Mitesh, before we get your picks, earlier today, 25,920 was the important mark. Where does support come in for the Nifty? Because a couple of parameters, whether you look at the PCR as well and the way we have fallen just this week, there'll be some optimism of a bounce. But where does support come in at?
Nigel, I think this is the level which I was watching, 25,900 broadly to about 25,850, and we're right there. And there's no sign of a pullback as yet. So we'll keep watching it. But in case, we break below this, and there's certainly a chance because the Nifty has started slipping below a rising trend line on the half-day charts, So that's, I think, slightly worrisome. So one, I think we should recover and close about 25,950, 960. That should be positive. Otherwise, good chance that we are looking at a 25,730, 740 zone to be tested, and that further opens up downsides below that. So I think slightly negative in that sense. So I'm waiting in case we can recover in the last 15 minutes. It looks difficult, but yeah, because we are at the support area, we'll keep watching. I have two sell calls right now, or STBT calls right now. One is Tech Mahindra, which is a STBT with a stop at about 1591 for targets of around 1550, 1555. And the other one is Capital Good. I think Nimesh was also mentioning that. BHL has had a very strong fall. So BHL is a STBT with a stop at 275.5 for targets of 265.
Okay, well, we'll take a quick commercial break here. And Mitesh, thank you very much for that. We'll see if these supports hold. Neeraj Devan will be with us on the program in just a bit from now. There's 15 minutes to go for market closing. Welcome back. Well, keep an eye out on the broader markets. A few stocks actually are calling for your attention. Transformers and rectifiers. They came out with a set of numbers. Actually, there was some growth that we saw. I think there was a switch in terms of management personnel, but that one has come in for a slam dunk, down 11.5% as we speak.
currently at the low point of the day, a big reaction is what we're seeing out there. You pull up a wider time horizon, of the stock chart as well. You'll see the stock has already corrected considerably from the top. So keep an eye out on this one. That numbers just came out close to around 30 minutes or so ago. Cupid, that's the other one, was trading down by close to around 4%. Now it's down close to 10%. So that's another accident that we're seeing. It appears there is some forced selling that we're seeing on this name as well. So keep an eye out on that. BHEL, the stock was down, I think, more than 11%. It's pulled back to a wee bit from the low point of the day. So just keep an eye out on this name. But the sector on the downside, which is losing its sheen today, is metals. Manisha joins us to tell us what's going on there. Manisha?
Well, yes, after making those constant highs that we've seen come in for many of those metals in last 3 and 4 months and record highs and multi-year highs, it finally seems like there is a bit of a pause in that rally right now. The last 2 trading sessions actually have seen a decline for many of those precious and base metal prices to the tune of 3 to 8% in some of them as well. There are a couple of reasons for that. One, it is the strength in US dollar index. Second, it also has to do with some profit taking after that very strong run up that we have seen many of these commodities. And the third important one is the increase in margins in CME that has gone up quite considerable in the last 2 times in the matter of a fortnight as well. And the third point is about the rebalancing of indexes here, which is now looking at realigning, reweightages, fund allocations, and some profit taking because of that as well. So the Bloomberg Commodity Index annual rebalancing starts between January 9th to 15th, and this is the period you could be looking at volatility and some profit taking as well in many of those commodities therein. And there could be some declines that we could see in base metal prices like copper, aluminum. The net shorts have been increasing. There have been various statements from the banks as well. Citi, for one, says that the estimated outflow because of this rebalancing could be the tune of $6.8 billion just from the gold futures contracts. Societe Generale says that net selling in silver and gold could be to the tune of $5 billion each. And then you have TD Securities saying that 13% of the open interest in COMEX silver is going to get sold. Deutsche Bank says that index-linked selling could see a nearly 2.4 million ounces of gold in sense of outflows there. Goldman Sachs is also estimating that the selling could be to the tune of $5.5 billion in gold and $5 billion in case of silver as well. Interestingly, Saxo Bank says that index rebalancing sell-off is something that you could be looking at being bought into because the structural bullishness is still on. The fundamentals have not changed, whether it's about shortage, underinvestment in case of mines, the deficit that most of the metals are looking at, the geopolitical tensions, the tariffs, etc. All of that is still there, but there was a long due or profit taking that was anticipated in many of these metals, and that's exactly what we perhaps seem to be getting in right now. Interestingly, it also is about the US non-farm payroll data that comes in tomorrow. So ahead of that, there is some more choppiness that you can expect.
Okay, all right. Thanks a lot for that, Manisha. Well, we have Neeraj Diwan, independent market expert, who joins us on the show. Hi, Neeraj. Good to see you on the show. Thanks a lot for joining in. Well, some of these capital goods stocks, BHEL, they have come in for a slam dunk. Siemens, ABB, all of them have come down. And the fear is that Chinese imports could be back and they're going to be facing some kind of competition from there. Your view on these names?
Yeah, good afternoon. And thanks for having me on the show. So actually, if you see stocks like Siemens, ABB, the stocks have not been performing. They've been under pressure for quite some time. Short-term impact can be because of some phase of China imports. But I think that is not the main thing. The main thing is earnings, because last couple of quarters also, we not see any major pickup in earnings. That's why the stocks have been drifting or staying on those in that particular range only. So I feel that this quarter is very important because third and fourth quarter for capital good, engineering, infrastructure are the most important quarters. So if third quarter you don't see any pickup happening, any material pickup as compared to last year, then they can be a problem for the sector. But I think let's wait for the results to take a view whether it's medium to long term, whether things are still in line or not. See, one space that still did well in this was, something like a Larsen & Toubro, which is also into capital good, engineering, infrastructure space. See, that showed some improvement last quarter in the results. So we saw that moment coming back in the stock. So I think what will be more important will be this quarter results to watch.
Okay, got it. All right, Neeraj. Neeraj, this is the market where you're seeing that prices are correcting, right, on various stocks. but some of them could be actually pretty good quality names. And maybe they're coming down to valuations that you like. So if I were to throw that open to you, the headline index is still just 1.5% away from the recent high that we saw. From, either the Nifty, you have stocks like Trend that are down nearly half of what it was at its peak. Name a couple of stocks that you like.
As far as sectors are concerned, if I first look at financials is one space which have been doing very well, whether it's NBFCs, whether it's PSU Bank. They've given a decent return over the last few quarters, couple of quarters. And, there's stocks there which are still reasonably priced. To look at ICICI Bank, it's a large cap stock which has started performing only in the last couple of days. And it's been languishing, even after a good set of results. A good balance sheet, good asset quality, decent names, and they've been able to maintain their names, which may improve now going further. So this is one stock which I feel in the large cap space deserves a look at, and it can be a good investment candidate. And among the others, L&T is another one which has been showing decent results, where you've seen some movement in the stock, but I think still there is good potential there. So L&T can be another from the large cap space. And in the large cap space, even if you look at sectors like infrastructure sector, capital goods sector, whether it's financials, autos, that is where you still see some decent movements happening. So you'll get good opportunities in capital goods where you've seen corrections. Like you mentioned, a couple of stocks which are down today also. I think there is value in those stocks. I think one can be accumulating those stocks for medium to long-term perspective.
This story, Neeraj, hi, afternoon, been a while, that government is planning to sort of, get Chinese firms to be able to compete for infrastructure projects, right? So there were restrictions on Chinese companies being able to bid for government contracts, Indian government contracts, and Reuters, they're sort of citing sources, but they're saying that the plan is to remove those restrictions. And I think the stocks are down because of this. You think it'll have an outsized impact, especially power? If you remember BHEL back in the day, Chinese imports for boilers, etc., was the bane of his existence. I'm talking about pre-2010.
One thing is that once the restrictions are removed, and let's see what sectors, where they're going to come and compete. So then we can take a call on specific, micro level at what kind of sectors, like whether it's power or whether it's infrastructure, capital good. But right now the order books are good as far as Indian companies are concerned. It's basically still yet to be seen. But I think valuation-wise, we are sitting at a good level. Power, like you rightly said, has been under pressure for the last 1.5 years. Power stocks have not performed. Whether you take out the stocks like green power stocks, like something like integrated, like a Tata Power, they've all been down for the last 1.5 years. They've been under pressure. So the demand is going to pick up, if the numbers are going to improve there, if the order inflow is good, I think there will be healthy competition. And it won't come overnight. It will not come tomorrow. Let's see, let the things come first, and then we can take a call on specific stocks and specific subsectors.
Okay. All right. Got that very quickly, Neeraj, before we let you go. What about metals? All that glitters was copper, aluminium, silver, gold in the last few trading sessions. Last 45 days to be precise. More upside? Is this a temporary pause? Would you look to buy, or do you believe that they need to cool off more?
I think that some profit taking is happening, and that may happen for some more time, but I'm still positive. I think if there's some more profit taking in non-ferrous space, copper, aluminium, I think there is still upside. There's good potential. There's good demand. With industries opening in US also, the demand from US. So globally, I think that play will still continue. The space will remain strong. So I think if there's a decent correction, healthy correction, there are opportunities to again get into these stocks.
Yeah, absolutely. I think there's about a minute to go for market closing. So let me just quickly wrap up things, right? And we're down about 270. We will end, of course, below the 20-day on the Nifty. So it's a kind of a clean break, and I dare say a convincing break as well. But it's also a market which is influenced in an outsized way by news whiplashing things on both sides, right? So that's the other way to look at things. But anyway, I think you're down and down in a significant way today. So I'll just look at straight up some of the large losers that we had as far as the Nifty is concerned. Hindalco was down, the biggest one, 4% cut. Geo Finance was down 3.5%. Wipro was down 3%. ONGC, TCS down 3%. And very few names, not even one name with over 1% gains. Eternal was a top gainer with just about a 3.25% kind of a pop. Towards the end, I mean, the entire capital goods space came under a fair bit of selling pressure. BHEL, transformers and rectifiers, Hitachi, there was ABB, GE Vernova, and so on and so forth. So lots of pressure points right at the end coming through as well. Nigel.
Well, that's right. From the broader markets, there are a few stocks called for attention. Miso continues at lower circuits, so that stock was down another 5% in trade today. Transformers and rectifiers came out with its set of number. The stock got slammed, was down close to around 9%. Cupid lost its way. No much protection out there. That stock, in fact, was down close to around 8%. Hindalco, from the headline index was down, but Nalco did come in for profit, taking down 5.5%. In terms of positive news flow, you had Panisha Biotech. That was the lone ranger, up more than 10%. Positive news flow coming out there. While IDFC First Bank, trim rates out there. The street is hoping that the bank is back in terms of momentum. So that was the outperformer when you had the Nifty Bank down 300 points. IDFC First Bank actually stood tall, up close to around 2%. On that note, though, we'll wrap up with news that today was a weak trading session for the Indian markets, but the hope is that maybe in the near term, we could be a little bit oversold. Wrapping up on closing bell, stay tuned. Markets Forward comes up next.